Finally, an up week in precious metals. Pretty decent week with silver and gold. And I wanted to talk about it real quick in this live feed. Been trying to make sure we do these lives every single Friday. So if you could please click that subscribe button, would love to have you on the channel. If you want to hit the like, would really appreciate that too to help this get out to the algorithm. But yeah, really good week in precious metals. Silver jumping quite a bit from the bottom here was about 1830 up to 2030, so a $2 jump from the bottom on July 25th to the highs of the close today. Today is Friday the 29th. So in that 4-day period, you had a $2 jump in the price of silver. Now, I wanted to go into detail in this video on why this happens and what to look into if you're looking for an answer on why precious metals go up or down. The best thing you can do is look at the DXY, which is the dollar index. So the strength in the dollar really does correlate with this. So let me just show you that. So this is the 5-day period right here from the 25th until today, the 29th. So the last 4 or 5 days in this chart. We'll pull up the same chart in the DXY here. Pull up the same 5-day chart, and you see the DXY went from 107.4 at its high down to 105.83 at the bottom, 0.82 at the bottom. So 107.43-ish right there, down to 105. So when you see that fall in the DXY, you see the jump in silver and gold. Same chart, you see silver just pumping up. In the week, you see the DXY going down. Now, this is very interesting because that's what's supposed to happen, and it partially might be because people are watching Yellen, they're watching Powell and going, okay, we obviously know you're full of it at this point. At this point, like if the fact that they keep pushing the goalposts and saying, oh, well, you know, we might be in the same definition of a recession for the past, I don't know, forever, but let's change the definition now that we're actually here. Let's change the definition of recession. Let's change it up. We're not really in a recession, despite the fact that we're in a recession. We're not really in a recession because we're changing the definition of that. So a lot of this might have to do with people kind of calling the bluff and going, all right, I'm not buying it anymore. It's time to get into precious metals. But I really wanted to talk about just how lofty the DXY is, because if you see the DXY went down just that little bit right there, just that tiny bit in the DXY. And we've been talking about this. If you've been subscribed to the channel, we've been talking about this for a long time. In prior live feeds, we were talking about the DXY correlation to precious metals. But let's pull back this chart a little bit and show the last 6 months on the DXY. So the dollar index still has a ton of room to fall. When you see it falling this much, just this tiny little time period where it's pulling back a little bit here, you pull it back 6 months and you see it's got a ton of room to fall on DXY. The DXY is majorly propped up right now. This is the highest the DXY has been since, I believe, 2002 or 2003. So if you see this, that little tiny bit right here, that's what causes huge jump in silver. This is what the cause is. And so it has a ton of room to go down. I mean, you look at the all-time chart on the DXY, yeah, you go, it literally hasn't been this high since... Last time it was this high was right in 2002. 2002 is the last time it was this high. So it has a ton of room to fall. With everything going on, you got inflation at all-time highs, or not all-time highs, but high. I mean, it probably is at all-time highs. They just don't want to tell us the real numbers. If you use the same basket of data from back when they had all-time high inflation in the 80s with stagflation, it would show you that we're probably higher than that figure. We're probably, if we use that same basket that they used back in 1980, 1981, it would show that inflation is probably well over 20%, but they're saying 9.1%. They're also saying that we're not in a recession, despite the fact that we're in a recession. Despite all economic definitions of a recession that we've always gone by, we're not using that anymore, apparently, and we're not in a recession, although we are in a recession. Like, it's exactly the same thing that they did with the CPI data. This is literally the exact same thing. So back in the day, they would say, the CPI basket was this basket, and then when it got too high, they changed that basket and make it look like it's only 9.1 when it's really over 20%. So they're doing the same thing with the recession. This isn't like a new playbook for them. They always have been doing this. So we're in a recession. No, we're not. We're changing the definition. Oh, CPI is out of control. No, it's not. We're using a different basket of goods. That's what they do. And it's very obvious of what's happening here. But for me, when I look at this period with the DXY and I see that it's at the highest it's been since 2003, it makes me go back to the points that I've brought up in prior videos. I just wanted to re-bring it up because we're seeing that tiny little drop in the DXY showing a huge jump in precious metals because of that. But we go back to that time period of the last recession that we were in, and in 2009, the market was about to collapse, and it collapsed with the 2009 recession, and it dropped down to its bottom here of 72. So when the dollar index was up at 90 and it fell down with the recession down to 72, this time period right here is when silver skyrocketed to 50 an ounce. This is what happens. So right here, we're about like right here. And you see that little wick down and you go, okay, the DXY is starting to fall down a little bit. If the DXY really starts plummeting like the same way that it did here, just like we're seeing the correlation that we talked about in the beginning of the video, well, then let's pull the same chart here from 2009 to 2011 on silver. You go to the 2009 to 2011 chart on silver right here, and you see that exact same time period. Silver had plummeted in the beginning, just like it's doing right now, where it fell down into the teens again. And you got it down to, at one point, it was down at just under $9. And then from there, it skyrockets from $9 to just about 50 an ounce in this time period, right when we saw the DXY plummet like that. The DXY goes down from 2009 to 2011. That drop right there caused that crazy spike in silver because the dollar index goes down. So when the dollar index is showing artificial strength, it is pretending like it has more power to purchase more silver. It's a big smoke and mirrors ploy. But if you see through the smoke and mirrors and you go, I don't think the dollar is as strong as they say it is, I want to have more metal, that's when you take advantage of an opportunity. So for me, I look at it right now and it seems like arbitrage. Now, I can't say what the bottom's going to be, but at the end of the day, to me, if I don't have precious metals in my portfolio, I'm not feeling too good right now. You know, like, do you want to have a lot of, do you want only dollars? I think that it's hard to say because when I'm looking at the charts and I'm studying everything going on in metals and studying everything that's going on with the dollar, it's hard because I believe in having a big dollar position right now because I think that there could still be a random thing that happens that plummets the overall market. Like people in Bitcoin, for example, Bitcoin's price is back up to almost 24,000. They're rejoicing and going, look, we're off the bottom, you know, things are skyrocketing. But the problem is Bitcoin is being seen as more of a tech stock by the broad market. So if Bitcoin is up, that scares me a little bit because that means the stock market's doing fine and the stock market's showing strength. But I think that the only thing that I think could pull metals down, again, to talk about the possibility of that, then again, the bottom might be in here. This might be the bottom, but I'm no guru. I can't say with certainty whatever the bottom is. That's why I have a big cash position take advantage of opportunities. When silver plummets down to 18 and it was down there, I'm taking advantage of opportunities like that because I have a cash position. But at the same time, what does get me worried is a lot of people don't know, why did silver plummet in 2009? Why did silver and gold plummet in the recession? It should have skyrocketed. When everybody was, selling off their stocks and the stock market was crumbling, why didn't it skyrocket right away? It took 2 years for it to skyrocket. And the reason for that, and this is what one of my friends told me, and I tend to buy into it, is that gold and silver is the most liquid position when they're getting margin called. So when all these big banks are getting margin called and they've been overextending themselves in the stock market, they usually go to gold and sell off their gold position because it's the most liquid on their balance sheet. And it's right now it's somewhat in the profit if they've been holding it a decent amount of time. And so they sell that to cover the margin calls on the bad positions that they have. So that is one of the possibilities that could happen that could bring silver and gold down. And this isn't the bottom, but at this point, it's hard to believe that it could go down again based on just how low it is. It seems to me like it's just being given away at these prices. That's just my personal opinion. But I wanted to go over the possibility, what I could see from a possible downturn, because overall, if you go back to the market here, the S&P and stuff still has a lot of room to fall. Like you look at Tesla, this week was up 5-6%, Apple up 3%. This is on the daily too. So if you go back to the 5-day on these, yeah, I mean, Tesla had a great week. Apple had a great week. And when you see stuff like that, to see precious metals having a great week as well, it kind of is scary to me because I want to see this. I want to see, overvalued tech stocks go down and then metals go up. I want to see the opposite of that. So if everything is going up and gold and silver is going up, that scares me a little bit because it's not performing in the way it should. In the same way that I look at Bitcoin, if Bitcoin's up in the last 5 days, you pull up the 5-day chart and Bitcoin's shown a nice jump over the last 5 days. To me, if the stock market is showing a similar jump, the broad market is showing a similar jump in that same week period, it's not really people escaping the dollar or escaping the stock market to go into a safe haven asset like Bitcoin or precious metals. And if you see it as a safe haven asset, it's like that argument to me isn't there unless we see the broad market sell off. Like if you're a big bull in Bitcoin, and I hope Bitcoin succeeds, I'm big in precious metals and I like Bitcoin as well. If it does succeed, you would want to see the S&P over this 5-day period crashing. You'd want to go, wait, this is the 5-day, hang on, here's the 5-day on the S&P. So on this chart right here, I'd want to see this inverted. I want to see the S&P going down, and I want to see precious metals and Bitcoin going up in that period, but we're seeing everything going up. That's something I look at. Now, that's not acting in the way it should, and we should recognize that and point that out. And that's what scares me, where there could be a possible situation where it could sell off. But if you go to the DXY, this is what you want to see. Over the 5-day period, if you want precious metals to go up, if you want Bitcoin to go up, you want to see a situation where the dollar index is falling and then those assets are going up. That's what you want to see. So we saw half of it. We saw half of the story over this last week. We saw a situation where the stock market, went up and metals went up. But we want to see a situation where the DXY is down and precious metals go up in addition to the stock market going down. You want to see the DXY and the stock market going down. Now, the interesting aspect of that is when you have this happening, basically if the stock market's selling off, they're taking, this is why I don't trust the stock market, because for me, it's not just about number go up. It's not just about, I got this silver bar, number's going to go up. I'm a millionaire because I got X amount of silver. I'm done because I have this much silver. It's not about that for me. It's part of it because I believe it's undervalued. But for me, it is, I want to have as much purchasing power outside of traditional finance as possible. That's how I look at it, period. So having the real thing and having it on hand is a big deal for me. Not having it in SLV or PSLV or any of these mining stocks or anything, because I believe in custody of the asset. But the reason I bring this up, and this is something not enough people think about, and it makes me laugh. Like I was going to start making more reels and videos and stuff on the Instagram and whatnot, but people think they own something. So when you go like, do you own Tesla stock? Yeah, I own Tesla stock. Really? You do? So can you sell it right now and get, cashed out on your Tesla stock? Oh yeah, sure. I can just open up the app that owns my Tesla stock. But you own it, right? Owning something means there's not layers of permission to get to it. That's what owning something is. When you have all of these layers of permission, that's what scares me. So it's like, oh yeah, you own Tesla stock. Well, say you have 100 grand in Tesla stock. Can you get me that 100 grand right now? Yeah, sure. Let me just open up the app. That's a point of failure. Maybe I think more like chess and I go, okay, what happens if the app doesn't open? What happens if the stock market falls 13% and the circuit breaker goes off and nobody can buy or sell their stocks? Okay, so say it all works out, and hopefully they answer the phone line. If the app goes down, hopefully there's someone there to pick up the phone line and make the trade for you. All of these things that happen there that people don't think about. And it's like, do you really own that mining stock? Do you really own that Tesla? If things hit the fan and you got to sell it, you're hoping that the real owner acts in time. And the real owner in that situation is whatever broker house you use. So TD Ameritrade, E-Trade, Scottrade, all of that. That's what owns your stock. That's what owns your mining stock, what owns your ETF or whatever it is. They own it, not you. And you have to ask permission of that. And so the reason I bring that up is when people sell off their stocks, they're flooding out of the stock market. They're flooding out of this fake digital nothingness into another digital nothingness, which is into your broker house, and then hoping the ACH system works, the wire transfer system works to send it into your bank account. And then to get the cash out of the bank, the ATM won't give you enough. The person, you have to actually go to the teller to get the cash from them. And then when all of that craziness is done, you got to hope that money itself is solvent and hasn't, inflated to the moon. So you have so many layers of permission, whereas I can just go, I have this silver bar. I own it. Here it is. I own it. not enough people think about that because they think the system is just never going to fail or nothing bad can ever happen. But people that have lived through 2009 know better. And they know that in 2009, there was a time when people weren't picking up the phone lines, that the apps weren't opening. They weren't working. Robinhood's already done this where they forced you to only sell your stock. They proved that you don't have custody of GameStop and AMC and all of that, right? People thought they had custody until the real custodian said, no, you can only sell. We're the real custodian. You can only sell. You can no longer buy. What? That's the thing that happened. Like literally, that just happened. So people don't think in terms of what do they own, like what is real ownership, what is real custody. And I think that will play out in this time around because the last recession was not the same thing that we're going through right now. The last recession was a housing bubble. This is a currency bubble. It's a totally different thing. The money itself is sketchy. It's not the houses that had bad loans on it, although there's a lot of that going on as well. But it's the currency itself that is sketchy. And that's what I think is the difference this time around. And so it could be more and more people wanting to have real custody of the asset. But when I think about what happens in the near term, if all the stock market plummets, stock market goes down and we go into a recession, say it's a recession, stock market crashes, and you might have like a circuit breaker go off because I believe the circuit breaker was implemented after 2009. And if you don't know about the circuit breaker, I believe if it falls 13%, in the comments, correct me if I'm wrong, but I believe if it falls 13%, they halt the entire market. Nobody can buy or sell. They just literally halt the market. And that's how it proves not even the broker house is the custodian in that situation. Then the overall U.S. government is like, nope, you can't trade. They're the real custodians when they literally cannot give you access to buy or sell. If it falls 13% in a day, they will circuit break it. Now that's a real free market. That's a free market right there. Free market capitalism. We can halt the entire market if it doesn't go our way. If our bluff is called that we're not really in a recession and the market falls 13%, we'll just halt it. Flip the chessboard over. No trading at all. Like what? The fact that even exists is so opposed to free market capitalism. I can't even begin to describe that. That's not fair. And in that situation, if people are selling out of the stock market, that means they're going to go into the dollar. So temporarily, they're going to move out of the stock market into the dollar. So we might see an artificial jump in the dollar. Now, that might be what smart money's doing right now. We might see smart money selling off their stocks at highs that they think is overvalued and going into the dollar. And that might be what's showing artificial strength in the dollar. Just a thought. So the dollar milkshake theory, the hot potato theory that we've been talking about on the channel for a long time, where people flood out of the stock market into the dollar, and then they're looking for something to throw those dollars at until the dollar burns them. So there could be a situation where more stocks get sold off and then show artificial strength in the dollar, which would give opportunity to precious metals. So that's exactly what's happening right now. I'm trying my best to dissect it because it's so hard to draw a conclusion on what's going on right now. But there's so many different theories and things that could happen next. And I really think that that's the accurate one. That's just my personal opinion, is that there's money flooding out of the stock market. A ton of money was printed. Ton of people went into the stock market. People that are not greedy, people that are doing the Warren Buffett method where you sell when others are greedy and buy when others are fearful. Right now, a lot of people were fearful in precious metals when it was under $20 on silver. That's when you're buying. But that's right now, smart money is thinking in that way, is like, is the S&P really going to sit at these lofty levels for this long? Are we going to see a situation where the S&P, if you pull back the chart on the S&P and you go back, 5 years, it's still sitting pretty lofty and it had a little rebound. I think that's a dead cat bounce in my personal opinion from this bottom here rebounding. But that has a ton of room to fall. Keep in mind, right here is right when the money printing started at the beginning of the pandemic. It's right here. So, to me, it has a ton of room to fall. And I think smart money is going to exit out of this, go into dollars temporarily, and then they're going to realize, wait, I got to do something with these dollars before they burn me, and then go throw them at precious metals. Now, is that happening right now? I would imagine that there's a lot of it happening like that, but it hasn't started nearly as much as it should. So that's kind of what I'm looking at myself. But by the way, all the comments, guys, I will get to the comments in a little bit. On my videos, a lot of people, they want the content first, and then we talk about the comments after if they want to watch these videos later on. So a lot of people can't be up this late like my crazy self and all of us in this live feed. I tend to do these a little bit later at night because I got a lot to do in the day. I see some people talking about where to get precious metals. Mineralexchange.com. That's where you can get in my auction house. But I specialize more in rare metals myself. But I actually had, I mean, it's funny on the website. We had a silver bar sell for a 100-ounce sold last week or the week prior for $2,000 on the website. So that was a pretty good deal. I don't see any other 100 ounces going that cheap right now. So we had some pretty good deals on the auction site as well, and just regular bullion. I specialize more in rare stuff, but I think there'll be a link down there in the description if you want to check out my business, if you want to check out my auction house. But let's get back to the video here. I have a feeling that we should be seeing a situation where this is artificial jumping in the S&P. I want to see the S&P plummet down, and at the same time, I want to see the DXY plummet down. And then in that situation, you will see metal skyrocket, and you'll see Bitcoin skyrocket, that kind of thing happening. Actually, what's interesting about Bitcoin is it seems to be trailing the overall market. So Bitcoin itself seems to be kind of affected by the overall S&P and the different tech stocks and things like that. They see Bitcoin as more of a tech stock. So actually in that situation, I think it would be more bullish for silver and gold than it would be for Bitcoin. That's why I believe in having so much silver and gold in addition to a small Bitcoin holding. That's what I do personally. But the thing is, it just seems that the overall market is just sitting lofty still. I don't want to see Tesla up big the same week that precious metals are up big. If Tesla's up big, I actually want to see precious metals go down. I want to see the stock market, if the broad market is up, if we got the S&P up over the last 5 days, I want to see this down. I've gone over that a couple times in this video, but really that's the truth of it. And I think the S&P has a ton of room to fall, a ton of room to fall. And then when you look at the dollar index has a ton of room to fall. You pull back the year chart on it, look at that. I mean, the dollar index is sitting so lofty with everything going on right now. It's the best of the worst, but don't forget that like 50-60% of this is based on the euro. And the euro is not doing too hot either. It's being measured against a basket. Like it's hard to say that you're strong if you're measuring against a kind of what's the right word I'm looking for? Just a not a fair way to judge your strength if you're judging it by other currencies to the tune of 50-60% of what you're judging it from is the euro. It just is, it's very odd. And, that's what I think is happening right now is we're seeing artificial strength in the DXY because so many people are exiting their stock market. So that's basically what I think is happening in a nutshell. I think that smart money over this last year period, as we see the dollar index go up and up and up and up and up, I think this is smart money exiting out of their overvalued stocks. So the dumb money is not really selling right now. They might think, oh, Tesla's going to keep going to the moon. All these stocks are going to go to the moon, put more money in the stock market. And that's exactly what the system probably wants. They want people to get beaten up by that. I mean, if you keep money in the stock market, want to know a sick ploy? If a 401k, this is something I actually want to say in this video. If a 401k actually was supposed to be for your retirement and they actually cared about you, why do they make you lock it up? Why do they make you lock it up like that? Why is there such strict principles on locking up the money, or you get these big damaging things that happen to you and you lose so much from the fees if you decide to sell it a little early? If they really cared about you, why do they force you to lock it up? Force you to give up custody of this money? No. You will lock it up in your 401k. To me, that's like once you've exited the traditional thought process of like the school system and the just the jobs in general. It's like when you exit that and you start looking at it from a different perspective, you go, that's pretty wrong. If you start realizing like, how much custody do I give up across the board? Who really owns my money? Who owns my house? Who owns my stocks? If you think what real ownership is this 50-ounce silver bar on my table. That's real ownership. I own it. It's right here. I got it. Like that's ownership. But that mindset has been given away for some reason, where it's like, oh, no, you hold my money, pretty much all of it, my entire retirement. Let's put it in this 401k, lock it up, and I'm not allowed to touch it. Regardless if there's a recession on the way or I don't believe in the overall market, it's locked up. There it is. It's locked up. There's my money. There's my retirement locked up into your market. Like, seems kind of wrong. It seems like a multiple marketing, an MLM, multiple level marketing or something like that, where it's like, just trust us. We'll lock it up in our system. It's going to be great. You're pot committed in our system. Do you want some bonds? We can give you some bonds. Bonds are great. How about an IRA? Lock it up in the IRA. You'll save there. It's like that's the thing that blows my mind is how much custody is given away. And I think that's what they want. So if you go through a recession, and they keep saying, the funny thing is, you know who brought back the word transitory? Yellen. Oh, thank you, Yellen. You're so great, Yellen. Wasn't that fantastic? Oh, I think this is just a transitory thing with this recession. It's not really a recession. It's different. This is just a transitory type aspect of what's going on in the monetary system. It's not a recession. It's like, judging by the fact that it meets every single definition that we've always used in economics for a recession, it's a recession, Yellen. Like, at what point do you start, like, just calling them clowns? You say, like, no, you're not an economist. I don't care what position you have. You're a fraud. Like, you have no idea what you're talking about, or you're blatantly lying to the people. Just my opinion. It's just crazy, the recession situation right now, that they won't admit it. Same thing with Powell. Powell came out there recently and said it's not a recession. It's like, really? Well, let me just bust out the definition here. Well, looks like it's a recession. Looks like you're just BSing. But that's what we're seeing. We're literally seeing that in real time. And what I think happens next is, when I keep pulling up these charts here, I think that the DXY is sitting artificially very high. Again, this is just the 1 year period. This is back from July of last year, July 29th of last year to July 29th of today. So exactly 1 year is what this chart is showing here. Daily candles on the 1 year. And it shows that the dollar has just been getting artificially stronger and stronger and stronger and stronger. And that, to me, is just smart money getting out of the market and holding dollars on the sidelines right now. When you look up the M2 velocity, which is this one right here, this shows if it goes down, it shows more people are holding their money under their bed. It means that they're just stashing money in their bank accounts and they're not spending. So back up here, this is like 97. So this has just gone steadily down, where people just don't trust not having a cash position. You know, like this, as this goes steadily down, it just shows that the velocity of money is getting lower and lower and lower, which means people aren't moving their dollars around. They're not buying stuff unless they're on mineralexchange.com. Then they're buying stuff because it's a great auction house. Watch some comments. How dare you? He talked about his auction house again. I'm signed up already, Rob. No, enough of that. Don't talk about how your business, the things that you've been working on for the past 5 years. Don't be talking about that. How dare you talk about your business? But it's true that people just aren't spending their money. It's as this goes down, it just shows that people are holding their money on the sidelines, which is basically the dollar milkshake and the dollar hot potato theory, which we've been talking about on this channel for like years. And it's finally happening in real time, where this dropping over the last, we could pull up the 1 year on this, I believe. You can see, like, well, this is actually at the beginning in March of 2020. Look at what happened here. You saw the M2, April. So from 2019 until what happened over the kind of when they shut everything down, it just shows you that it just was a straight line down, and it's just kind of flatlining, where people just are holding dollars on the sideline. You pull up the 5 year, same thing. Pull back the all time. I think it only goes back to the 60s or 50s or 60s. So it just shows you that, even when Paul Volcker was running the show in 81, the M2 was higher. So people were just not, that's crazy. Just goes to show you, people were throwing their money around back then. They were participating in the economy. Here is where to get us to participate in their economy, they're basically forcing us to. Like, we have no choice. Like, yeah, we want inflation to be at 2%. Despite it being at 9.1, they still want it at 2% to force us to buy stuff in the economy. That's their crazy way of how they think a good economy is supposed to work, is make inflation at a certain level to force the citizen to go and buy stuff because they're afraid of inflation. Like, literally, that's their logic. But the other thing I wanted to bring up in this video is for Yellen. Oh, Yellen, you cutie pie. For her, because she's such a fantastic economist. I have nothing but praise for her. She's great. I wanted to show what, if we get me out of the way, this is the federal funds rate chart. So this is when they say we're raising rates, this is the chart. And literally every single time they raise rates, we've talked about this in the past, it causes a recession. The gray periods here, if you've never seen this chart, is what a recession is. So every time, this is the Paul Volcker area, they raise the rates, recession, gray line, recession. They raise the rates again, recession, worse recession. The longer the gray line, the worse the recession was. And so what's interesting is the longer, like, first off, every single time they've raised rates, it's caused a recession. Every single time. It's like the most obvious correlation ever. If you're into pattern recognition, if you're one of those stock traders out there, I'm not a stock trader. I don't really go by too much pattern recognition. I just like to call it like it is. Every single time it's raised, though, you can see a clear pattern that it causes a recession right after. Federal funds rate raises, recession. Federal funds rate raises, recession. This is the 2009 recession here. They got it up to just about 5% when the housing market, the bubble popped. Right there at 5% is when no more people were buying houses because the rates were too high and the mortgages cost too much money. And they said, know what? We can't afford it. We got to sell the house. Foreclosures happened. Everything happened. And we saw the stock market plummet. Now, here's the scary part. This is what not enough people are talking about. Peter Schiff, props to Peter Schiff for bringing this up. Got to give him credit because still a big fan of Peter Schiff. The longer the period where it stays at zero, the worse the recession will be. I think Peter Schiff is on the money when he says that. So when you look at it from 2009, 2008, they dropped the rates down to just barely over zero, pretty much zero. And then they went down to pretty much zero. For that huge time period right there, the longer that time period happens, the worse the recession is going to be because it's just tightly winding up. All the monetary system is getting tightly wound up because they're giving so much money away for nothing that when they start actually asking for something, it's like you got somebody that you've given a bunch of IOU notes towards, and you're just like, yeah, here's another IOU note. Here's another IOU note. Don't worry about interest or anything. Here's the IOU note. And then you turn around and you start asking for interest. That's when things hit the fan. And that's what they've done. They said, here's a bunch of free money. This whole period here, it's the longest time. Look at all the way back, this whole chart. This entire period of time is just flatlining, giving away money like crazy. They starting to raise it a little tiny bit. Then the entire world gets shut down right there, and it plummets down. And we see this is the beginning of the pandemic and all of that. And it dropped to fight that. They stopped raising rates and dropped it down to zero, and then gave away a bunch of money. And now look at this sharp. Do you ever see them doing that sharp of a raise? They're always steadily rising, and then they actually do raise. They're doing the right thing. But the truth is, if you do the right thing, you're going to cause a recession. Point blank. They're doing the right thing. I didn't expect them to do back-to-back 75 basis point hikes, which is 0.75% hikes. Realistically, they got to do a Paul Volcker and bring it up here, but they're not going to do that. But the thing is, just this alone right here, is there a single time where you see them raising sharply like that where it doesn't cause a recession after? Yellen? Hey, Yellen, would you like to look at this chart? I happen to have this platform here where I can tell some people that you're full of it. Here's my charts. You should show them from time to time when you're saying it's not a recession. Because last time I checked, every single time you've raised rates, it causes a recession. There hasn't been a single time. So despite it being an actual technical recession, which I believe that this was 2 quarters of negative growth, which caused this gray line right here, but they refused to put the gray line here yet. They did here. This was 2 quarters of growth, of negative growth. How come they haven't put it here yet? Because they're changing the definitions or whatever they're trying to do. But the truth is, we are in a recession, and they are saying that so they can continue to raise and not scare people to get out of the stock market and move somewhere else with their money. The writing's really on the wall. I mean, they're up to 2.33% at this point, and now since they're not giving away money for so cheap, it's going to get more expensive to get a mortgage. It's going to be more expensive because the rates are higher. And then that's literally what caused the last recession is they raised the rates. They couldn't afford these overpriced houses anymore, and the market crashed. This time, the entire currency itself is overvalued. The entire currency itself is pretty much looking like a Ponzi. And here they are doing the same thing. So it's double whammy. You have overvalued houses due to people trying to put the money somewhere because they're afraid of inflation and all these different things. So they already did that. And then on top of that, the currency itself right now has been overprinted and overinflated. Last time we were in this situation in 2009, keep in mind, inflation was only like 2% back then. I believe inflation was very, very low in 2008, 2009, 2010. It wasn't high inflation back then. Now you have record inflation at the same time that you have a housing bubble, and at the same time, the entire system is just, they've kicked the can. This is them kicking the can down the road this entire time. Again, this is not a housing bubble. This is a currency bubble and a housing bubble. The currency itself is in a bubble in addition to the houses. So it's this on steroids. It really is that. It's 2008, 2009 on steroids. And now here they are raising the rates exactly like they did back then that caused that crash. They gave away money for too cheap, raised the rates, caused a recession. The only difference is they've made it so much worse and this is why I agree with Peter Schiff on this. I think that he's on the money, that when you keep this low for so long, when you give away money for so cheap for so long, that when you finally start winding it up, it gets much, much worse. It's a way bigger recession. That's why it was such a long recession in 2009. This one will be way, way, way worse because they have kept it so tightly wound by giving away money for so cheap for so long that when it finally gets exposed by them raising the rates, it's a bubble waiting to burst. It's just obvious. And so I think that what's happening is the reason M2 is down so much is smart money's going into the dollar and sitting on the sidelines waiting to see an opportunity. But that's overall the theory that I've put up myself. I still stand by the hot potato theory. I've been talking about that on the channel. I'm sure a lot of people that are in this live stream know that I've been talking about that for a while. It makes a lot of sense that the dollar is showing artificial strength. And this is a long time of artificial strength. I mean, you pull back, you go to the 5-year and you look up, I mean, from 2018, the bottom in 2018 was $88 on the dollar index, all the way up to 106. 105, 106, and you see this tiny little drop. That's what caused silver to just jump back up over 20, is that little tiny drop. So you see this really drop, you see the dollar index really plummet down, you're going to see, you could see $100 silver. Really, if the dollar index plummeted down to, say, 90, drop down a good, 10, 20 points, you could see silver getting to triple digits. You could see gold get to 5,000 an ounce. It's very possible because the dollar is so ridiculously overvalued. And the fact is, it's just the best of the worst. And not enough people want to admit it or tell the truth. It is the best of the worst, and it's all bad. None of these currencies are back to anything. And meanwhile, you have competition out there trying to knock you off the reserve currency status. So there's just so much going on right now that I'm just not buying into the nonsense of, oh yeah, let me buy into an overvalued tech stock. Let me put it into the S&P. That's a great idea. To think that this is just going to continue to skyrocket up. The only way the S&P skyrockets up is if the Fed decides to go back on their word and go into negative rates, they go through a recession, they drop the rates down to zero again, or even go to negative, and then at the same time print and continue to buy assets when they say they're going to unwind the assets. They'd have to do the exact opposite of what they're doing right now, and then that would cause an artificial jump in the S&P and them to kick the can down the road even further, which that's not out of the question for them. It's really not. They can do that, and they might. So that's something to think of as well. But that just really just makes the problem worse. So you have to give a little bit of credit. You have to say, you are somewhat doing the right thing by raising rates as much as they are. The problem is they're raising them pretty fast, and they're not raising them enough at the same time. So they need to raise it higher than that, but they also are raising it too fast already. So they're really in a tough situation here. And then meanwhile, we're in a technical recession right now. We're in a technical recession. They don't want to admit it, but we are. And they're raising rates, which has caused a recession every single time. So they're doing all of this at the same time, and it's really just a matter of time. So what's my play? If I'm just going to say what my play is on this, my play is still the same. I wouldn't be able to sleep at night if I didn't have precious metals, if I didn't have actual ownership of the metals myself, not some ETF. That's why I built an exchange. That's why I'm in the business I'm in. At the end of the day, it's a good time, though, to have dollars. And it kills me to say that. It kills me to say that it's a good time to have some cash on the sidelines, only if you have a plan of action for the next year. That's going to go down in the next 6 months or a year. So it's good to have some powder dry, but with the knowledge that it's a hot potato. And it's good to have a hot potato in a recession, but it's bad to hold on to that hot potato for too long. So if you're part of the people in the M2 velocity being down and holding your money on the sidelines, I think props to you. I think that's smart. I'm trying to do that myself. This isn't advice, by the way. I'm not financial advice, just my opinion. But in my opinion, it's a good idea to have some cash on the sidelines because you could see personally, I think it's very possible that this is a bottom and we see metals start steadily going up, if not moving up pretty fast, because it's already extremely low for metals right now. But what is the possibilities that this isn't the bottom? What are the possibilities? The first one would be if there's margin calls, I think that these funds would go to their 5% gold position. They usually have about a 5% gold position, and they sell that off because it's the most liquid. Ironically, it's what they actually own. All the other stuff is a Ponzi circus, but the gold is real and the silver is real. So sometimes funds will sell that in the beginning of a market crash to cover margin calls on the other positions. So that might happen, and that's what happened in 2009. So that could bring metals a little bit lower, but that's opportunity. So have some cash on the side is a good idea, for at least what I think is a good idea, my personal opinion, not financial advice. Have some cash on the side to throw if there's an opportune moment. But I also wouldn't be able to sleep at night if I didn't have such a large silver and gold position. So for me, it's just about stacking ounces. It's not about, how much. It's not about how much is going to go up. It's about how many ounces do I have and how much power do I have outside of traditional finance. That's what I think about. Like outside of the traditional banking system, how much do I actually own? And I don't rely on them. I don't have to go to the bank and beg them to do a wire transfer for me or beg them to get my money, come back at a later date to get my 10 grand or whatever. That's what I'm focused on myself right now. So having custody of real assets is a big deal to me. But in addition to that, having some powder dry, having some dollars sitting there on the sidelines as well, that is a big deal for me as well. And that's pretty much all the stuff I wanted to talk about in this video. How long have we been live in here? We've been live for about 40 minutes. I'm trying to do, for once, I want to do one of these live streams where I shut it off before we go for 2 hours, because me, we'll keep going and going and going, where I never stop these. But that's pretty much my rant on what's happening with gold and silver right now. If you agree with me, hit the like button. If you don't agree with me, hit the dislike button. But would really appreciate it if you did something for the algorithm to get this video out to more people. Hopefully it brings some awareness about precious metals. Let me go through some of these comments here. Bite Hunter says, are you on TikTok? I am on TikTok. I actually did one video on TikTok and it went so viral that it scared me a little bit. I don't know if that's a good thing or not. Maybe I should have kept doing it, but I did one video and it was like 600,000 views. And I'm like, okay, that was pretty crazy. I guess I'm good at this thing. Like maybe I should keep doing this. I don't know. Maybe I should, but I went on this side. You can actually go and see that. Go there and you'll see I did like one video went viral. I don't know. I like, of all the platforms I use for videos, YouTube is clearly the best, but I like Instagram because Instagram, you're actually able to DM. You're actually able to message people on Instagram, which is cool. And I'm able to kind of have a nice catalog of my pieces of my collection and stuff like that. So if you're not following me on Instagram, at Rob Sultan on Instagram, I actually really like that platform. And I like the stories on it too. Like I always give a heads up when I'm going live on my Instagram because YouTube doesn't always show the notification for some reason. A lot of people that are subscribed to my channel and have been subscribed, they tell me that, hey, I don't get notified when you go live and I want to get notified. Well, follow me on Instagram then because I give you a notification in the story on Instagram as well. Bite Hunter, I appreciate it. Bite Hunter gave me a 1999 super chat. Really appreciate that, Bite Hunter. And you said, are you on TikTok? Yes, I am. I literally did one video on it, and it scared me because it went so viral that I was like, wow, okay. Don't know if I should keep doing that. I don't know. I think that when you want that to happen, right? Like you want your video to go viral. But yeah, I did. Like so, that's. That video with me holding the movie prop money, it got like 600,000 some odd views or something like that. And I'm like, okay, that's a little bit wild. But yes, I am. And I really appreciate that, Bite Hunter. Bite Hunter has always been supporting me and supporting this channel. I appreciate you. Vacation Time 247 in the house. Another person that's been here since the beginning. How about a 24-hour live stream? I almost did that. During the Silver Squeeze time, like that was a time where I went live for I feel like 6 hours or something crazy like that. I have done that before. If you want to hear me ramble and talk a lot, I am capable of doing that. What's up, Zilla? Zilla in the house as well. Ex-Canadian, please talk about yourself. Where are you from? It's kind of a broad question. I don't know where to start with that. But Jason, you are correct. You are correct. I like my channel to get out there in the algorithm, but I will say that you are correct. Go through a few more comments on here. Water. Keller's Cars, I agree with you. Water is something that I think about a lot. I think Michael Burry is right about that. Someone brought up Michael Burry earlier, and Michael Burry, I believe, is big on land and water right now. And that makes a lot of sense to me. Like there's part of me with my business with Mineral Exchange, I was thinking about moving to Vegas or moving to Nevada, and a lot of people are telling me about the water problem over there. And that does trouble me a little bit, because at the end of the day, we are just talking water blobs. I really am big on water, and I'm kind of a health nut, so having pure water and good drinking water is a big deal to me. So yeah, I believe that there's a lot of merit to that. It's definitely scary to think about if there's not enough water out there. But yeah, Michael Burry is big in water, I believe, and land. So there's something to be said there. I think that is a good thing to bring up. Anthony says, so you think silver will hit 100 an ounce? Clip it. Clip it. You can clip it. No, I can't say for certain. I can't say for certain. I can say that I have custody of my silver. I have real custody of it. When you have an ETF or something like that, you don't have custody of it. But if the dollar index does crash, if we see the dollar index plummet down, I mean, if you look at I mean, the S&P could easily fall, and if the S&P falls, it'll go into the dollar temporarily. But I think that's what's already happening. But if you see the dollar index plummet down, you're going to see silver skyrocket. I mean, if the DXY, if we pull back, and we'll probably end the video on this. I want to make sure I got all the super chats and everything, but let me show you this last chart before we end this. So if I go to the 5 year, let me pull it back a little further. I've gone over this so many times. People are probably sick of me showing it, but it really is true. I mean, you can study the history if you want to know what's going to happen in the future. And if you look at the DXY from the last recession from 2009, and we're in a recession technically. Despite what Yellen says, despite what Powell says, we're in a recession. And if you see what happened after the last recession, it plummeted down from 90 to 70 to the low 70s. So about $20 it fell down on the DXY. So a $20 fall on the DXY, remember this, $20 the DXY fell. On that $20 drop, silver jumped back in that exact time period. So right here is when that $20 fall on the DXY happened. A $20 fall on the DXY made silver go from about 10 to 50. So $20 down on the DXY caused literally a 5x return, a 500% return on silver. That's what happened when the dollar index fell by 20 points. So when you see that and you go to the DXY now and you realize how lofty the DXY is since that time period, I mean, look at the DXY now. Look at how much room it has to fall, how much dollars are sitting there. The dollar index falls down 20 points again. I mean, it's just a matter of time what happens. I mean, that's crazy. Look at this time period from 2008. It was at 71, and now it's up at 105, almost 106. If it fell 20 points, last time it did that, the silver price 5x'd. So that would be, what's 5x from here? 100 an ounce, right? Silver's at $20 an ounce right now. If it 5x'd, that's $100 an ounce. It really is that simple. And so that's kind of what I look into when it comes to everything that's going on here. So if it goes down $20, if it goes from 105 down to, what would that be? So 85, it would only need to fall to here, to about here. And that's 20 points down. Last time it fell 20 points down, silver 5x'd. And with record inflation and all of that adding more cherries on top, I mean, it seems pretty obvious what could happen. That's what I look into myself, and I hope you guys found some value in it. Before I end this video, I know some people, you might be mad at me. Maybe this is the time to click off. I waited until the very end, but I want to show what I've been working on. I want to show my business. So here's where the ad's going to be. I'm not paid for this, despite the fact that I own the website, but if you want to register to my website, for what I do, like this bar, for example, let me show you. Here is my website, iownmineralexchange.com, if you want to register and be part of the auction house. I auction rare vintage bars. I'm from the rare vintage world, and I also auction some regular bars as well. So if you are interested, shameless plug into my auction house of what I do for a business if you want to know. But one of the coolest bars is this one. I think that, hang on, check this out. I'm curious what this bar brings. This is a double strike Engelhard, where it has, like, if some people from rare coins, they like double strike coins and air coins. I happen to have one of these here. but with an old Engelhard bar that's out of business now. That corporation's out of business. But that's what my specialty is mineralexchange.com. I'm an auctioneer. So if you have any rare bars in your stack, I can help you get top dollar for them if you want to consign. That's my vision with Mineral Exchange, is start kind of with rare and work my way into more regular bullion to expose how much the premiums are to a true free market. That's what I'm trying to do with my company, with Mineral Exchange. So starting rare, and I do sprinkle in, I might even sprinkle in a couple just generic auctions for generic stuff, for, run-of-the-mill silver stuff, 10-ounce bars, things like that. And I might sprinkle in some of that even this week or even next week. They always end on Sunday. So that's what I do for a business. Mineralexchange.com. There should be a link in the description if you want to register. It's free to register, $1 to verify your account to bid, and then you never have to verify again. But that's what I do for a business. I run an auction company. So if you want to know what I do, that's what I do. You're more than, and also I will say, if you want to chat with me on the phone, the guy who won that so there was a guy who won, he might even be in here. I don't want to say his name because I probably shouldn't say his name, but he won this bar. So if you want to know what rare bars are going for, hang on. So there's a guy who won this bar, and I promise that if you spend over $1,000 in my auction house, I will personally call you. So if you win something over $1,000, I will personally call you and talk with you on the phone. And I'm not even going to say a timeline because I actually really like this. This dude who won, he won. One of them won this consolidated bar, and that was a super cool 100-ounce silver bar. Won that one. I talked with him for an hour the other day, and then we had, and he's a super cool person. If you're watching this, super cool person. And then so this 50-ounce bar sold for pretty close to spot, like $1,125 it sold for. And then this one sold for $2,250. And then the other one was right here. So this 100-ounce bar sold for $2,000. And I talked with him for about an hour and a half on the phone. Super cool dude who won this one. But all kinds of rare stuff and all kinds of just regular. I mean, that's just a regular price on the 100-ounce there. Sold for $2,000. So pretty good prices on some of these stuff. But if you want rare stuff, that's what more of my specialty is with Mineral Exchange. But enough of that. I won't advertise anymore. I know people don't like it when I advertise, but I'm real proud of my business. I've been working really hard on building an auction house. Not very easy building an auction house. But if you have rare bars and stuff like that, I'm more than happy to help you get top dollar if you want to get top dollar for your stuff, or if you just need a place to have as an exchange that will get you fair market value for your items down the road. Stay registered to the website, mineralexchange.com. Make an account. Check it out. Let me see. We'll get to a couple more comments. I appreciate that, Jason. He says, the phone call is amazing customer service, not joking. I appreciate that, Jason. And I'm serious about that. If somebody is willing to support my business and support me on what I'm doing with the auction house, I'm going to call you personally. I'm not going to have some other person call you. I'm going to call you and say thank you. So make sure you put in the right phone number. When you go through the registration form, I think this is the registration to the website. Since we already got through all the information, guys. So if you don't want a little bit of an advertisement, I own the business. It's not somebody else paying me. I own the business, and I'm not paid for this. But if you go to Mineral Exchange, if you go here, when you first enter the website, when you click enter, there'll be a register button right here. You click register, and then you can fill out that little form right there, and that's free to do, and you are now registered to check out the auction history, to check out what's available. All you have to do is register, but make sure you put in the right phone number and the right email because you have to verify the email. And if you do win an auction over $1,000, I'm using the phone number you put right here to call you and say thank you for supporting the auction. Thank you for supporting the business. So make sure you put in the right information, and I will personally call you if you win. But that's everything I wanted to talk about in this video. I'll talk about, someone says Lawless Walrus. That's a great name. Lawless Walrus. You should get the domain for that. I like that. Lawless Walrus says BTC Talk comments on Ripple. Although I'll close on this. The Bitcoin price is back up to 24,000. I'm not buying that in the same way where I called out that when precious metals are up, I want to see the overall market go down. I don't want to just see the DXY go down. I want to see the stock market go down. I want to see the stock market selling off and that money going into the DXY, propping up the DXY, and then the DXY plummeting down. Like that's what I want to see, that kind of thing happen. And that is what would raise the price. If silver skyrockets in that scenario, that to me is a confirmation that it's going to rocket higher. But with Bitcoin, the fact that it's back at 24,000 doesn't really impress me yet. If the broad market sells off and everything goes down and Bitcoin goes up, that makes me interested. If the tech sector goes down and Bitcoin's up, Bitcoin's just going up with the tech sector right now. So that doesn't really impress me. I don't believe in XRP, unfortunately. Some people are not happy that I don't believe in XRP. I only believe in the first one. I believe in Bitcoin a little bit, and that's it. Mainly precious metals. I have a little bit of Bitcoin. That's my portfolio. But yeah, Winging It Tracy says 90-1 makes silver a screaming buy. I agree with you. Excuse me. Scott says, hey, Rob, do you remember me? The avatar it's funny how you remember people by their avatars. He says, what Rolex do you have? I have a Yachtmaster and a President, both the vintage ones. Someone brought up PSLV. I mean, PSLV is better than SLV, but at the end of the day, it still is giving up custody, and I don't believe in giving up custody. Yeah, I don't get into much of the altcoins. I see a couple of people bringing up altcoins and stuff like that. I really only believe in Bitcoin. I think XRP is not the one I'd be interested in myself, but that's what I do. You can do what you do. That's just my personal opinion. I believe in precious metals first and foremost, a little bit of Bitcoin and a little bit of cash to have some powder dry, and building your own business and having a cash flow based business. I think that that's the most important thing. That's why I changed my business model from being a constant flipper and dealer to being a services-based company to help people get top dollar for their stuff. So that's kind of my expertise, is taking a cut of an auction and helping people get top dollar for their items instead of being the person selling and all this stuff all the time. So for me, that was the business I wanted to be in, is moving more towards services. I think services is a great place to be, but having a profitable business that's cash flow pointed towards getting cash flow, and then having cash on the side, having some powder dry on the side, having precious metals and a little bit of Bitcoin. That's how I look at it. And I agree, if you don't hold it, you don't own it. If you don't hold it in your hand, you don't own it. And if you're from the Bitcoin world, if it's not your keys, not your coins. If you have your Bitcoin on Coinbase, if you got your Bitcoin in some exchange, it's just as bad as owning a stock. You don't have custody of it in that situation. So if you don't hold it, you don't own it. That's how I look at it. That's the video, everybody. If you want to support me and what I'm doing, and if you want me to call you specifically, I will literally call you myself if you win an auction over $1,000 on the website, mineralexchange.com. If you want to just register and see what stuff goes for in the rare world, if you're like, wow, I didn't know a vintage 50-ounce silver bar in Old Englehart went for that. I have a few of those in my collection. Now you know, and you might have gotten ripped off. You might have thought it was only worth spot. Now you know it's worth a lot more. I'm helping people. It's hard for me because people didn't know it when I first started out, and there was a huge opportunity there. But now I'm just showing everybody this is what it goes for. Here's the auction histories, all for free. Some people pay a lot of money for WorthPoint and these different things and check auction histories on stuff. They pay for a certain app, $20 a month to check auction histories. For me, it's free. So I would register an account just to see the auction history, if anything. If you want to bid, you just have to pay $1 to verify that it's actually you, and then you can bid on anything forever after verifying. So that's what I do. And if you want to check it out. Jason says, your business is about to go crazy busy. I appreciate it, Jason. I hope. I'll tell you what, I'm not changing, and I'm not advertising other people's companies either. It was really hard. To the people that are like, oh, here he is talking about his business again. I have something to tell you. I could be advertising other people's businesses. When I advertise my business, I'm helping grow my business, what I own, what I put my work in. Nobody else owns it. I own 100% of the Mineral Exchange. 100%. Not 80%, not 50%. I don't take an ad money for them. I own the whole thing. The domain, the website, everything. I built that from scratch. For the past 3 to 5 years, I've been working on that. And so I'm real proud of it. But this whole time, it's been hard to get offered big money to do advertisements on your videos. They see some of my videos getting good amount of views, and they're like, oh, well, this is the perfect, please advertise my glorified mining stock or advertise my ETF. And I won't do it. I refuse to do it. Other people, they might be mad at me because they do it and I don't. I refuse to advertise other people's companies, especially ones that I don't believe in. There's been a few that I believe in that I've thought about, and I still haven't done it. So just know that if you're like, oh, here he is shilling his own product again, that's the truth. Zilla says, let's get him to go another hour. I'll tell you what, I'll do that. What should I do? The sand timer trick. Will you fall for it? To the people in here, if you hit the likes up to 200 likes, we'll flip the sand timer. You have 2 minutes to get to 200 likes. We got 187 people in here, 114 likes. The odds, I mean, it's possible. It's possible. There are some people in here that might not have hit the like button. It's possible. If we get to 200 likes, we'll go. We got 2 minutes. Let's go. That's a tough one. The odds are. Ethics versus sellout. Yeah, I mean, like I don't want to call other people sellouts. I mean, it's. I'll tell you this much: it's extremely hard to build a website. It's one thing to build the website; it's another thing to operate it. To own the right .coms, that's very expensive. To build the website, all of that stuff, very hard to do. And then knowing how to operate and knowing how to code a little bit yourself, extremely hard to do. So there's a lot to it. And then not only that, but then providing a service that's worthy of being there. All auction houses usually charge about a 20% buyer's fee, and I felt like cutting them in half. And I charge a 10%, well, more than in half, because they charge a 10% consignment fee and then a 20% buyer's fee. We only do the 10% buyer's fee, so we actually do a third of the price of other auction houses. So I'm going to try to even lower that over time as I move into more modern bullion. But right now I'm specializing more in the rare stuff like I always have with Mineral Exchange. And down the line, we're going to start putting regular stuff on there just to expose what the true premiums are. That's what I'm doing myself. And it's starting to grow quite a bit. There's a lot of people checking it out, and I appreciate you all checking it out. Let me see here. Bitcoin George says, he gave me a $10 thing, says, flip the sand timer. I don't know if people want me to go for another 30 minutes. We're already up to an hour at this point. I appreciate you a lot, Bitcoin George. I really do. But a lot of people are telling, literally in some of my comments, and then people will stick up for me too. They'll be like, your videos are too long. And then at the same time, there's people that are like, I like the videos. It is better than eBay. BZ, it's not only better than other auction houses by quite a bit. The eBay charges, they bump the fees up, I believe, to 14%. So eBay's cut is 14%, which means the cool items are not going to go there because they don't provide any value. Put it this way, if you pay eBay 14%, you're paying 14% specifically just for the value that eBay's platform provides you. They don't take the photography for you. They don't do the photos for you. They don't do the shipping for you. They don't advertise your product for you. They just let you list it on their platform and they charge 14%. We do the photography, we do the shipping, we do the invoicing, all the logistics behind it, have the huge marketing platform where the thing is eBay doesn't send out, advertisements for you of what's being auctioned. They just hope somebody searches it. So we do like 10 times more. And the other thing too, what's interesting is I put some items on eBay just to see how much views it would get. And it doesn't get nearly as much views as items on my website. So that's interesting as well. So yeah, they charge quite a bit more. And I think that there should be a disruptive auction house in there, especially for our specific niche. And that's why I built it. It was very hard to build Mineral Exchange. A lot of people wondered why my name was Mineral Exchange, and now they might know. I've been working on it for a long time. Jason says, it's Friday night and you've got a good viewer engagement. Keep pushing and repeat benefits to the auctions market. I appreciate it, Jason. And I mean, I do like to talk about my auction house because I want more people to grow into my auction house because the auction house is going to be a really big thing for the bullion industry. It's going to help. The thing is, people will start looking at the auction histories as we start putting more and more lower weight bars and just kind of, regular bullion in addition to that. It's going to show what the true premiums are. I might even run some like rolls of ASEs and stuff in the future just to show what the premiums are on ASEs and stuff like that. So if anything, just register an account to check in from time to time. I'd really appreciate it if you just built an account. But if you want to bid, it's only $1. It's not to make money the dollar. It's just to verify that you're an authentic person. We like to have the community have some integrity, and that's that. But yeah, I would really appreciate it if people check it out. Mineralexchange.com is my business. But I feel like the thing is like, when someone gives me a super chat and says flip the timer and keep going for longer, I'm going to go a little bit longer, but that means a lot to me. It makes me want to go another 30 minutes or something like that. But I'm going to try to keep these at about an hour. We're already over an hour right now. I really appreciate you all. Yeah, exactly. So Zilla says 14% on selling PMs is usually a big loss for most people, or the lion's share of the profit. Exactly. I cut that down by 4%. But not only that, what I notice is people on eBay can't take a good photo. Like, they're not good at doing the marketing. They don't have the community built around it to sell their product for top dollar and deal with the shipping and the logistics of that. You also have to worry with eBay on who you're shipping it to. The buyer is also worrying that it's an authentic product. So Mineral Exchange verifies the product, does the photography of the product, so the buyer knows that it's a true silver bar and it's a verified pure silver bar or gold bar. So there's all of that goes along the lines in addition to it. So, and we're cutting the fees by 4% of eBay. So I'm pretty happy with the business model. I'm happy with what's going on, but there will definitely be a lot more going on the website, and people are going to realize that they make more money consigning items to Mineral Exchange than they do to some platform that does nothing for them. It doesn't do anything for them. Doesn't do the photography, doesn't do the marketing, doesn't do the logistics, and then they have to deal with all that stuff that they do over there and deal with all the feedback and all the stuff that you have to deal with. I don't believe in it. I think that there's room for another one. Bitcoin George, you want me to stay in these live feeds, huh? I appreciate you, Bitcoin George. Thank you for the super chats, man. He says, what are your thoughts on the 50 million PM buy this week from Miles Franklin? Why do they only buy pre-33? Well, pre-33 gold is considered to be, I don't know if they only bought pre-33. I'm not on the balance sheets. Like, I can only tell you what Mineral Exchange does. I can't tell you what another company, I can't tell you anything about their balance sheets or what they accepted or their invoices or anything like that. I only know my invoices. But I will say that there is, it's a recognized barter. It's a recognized currency. It's considered a currency. It's actually considered a $20 bill. Even though we'd never sell it for $20, it is legal tender of $20. That's the truth of it. So there's partly due to it being a currency is a part of the equation as well. But yeah, something to think about. Definitely something to think about. Definitely very interesting. Jason says, how much powder? I wouldn't be opposed to having a 20-30% cash position right now. I wouldn't be opposed to that. That would be a number that I think is normal for me personally. I can't seem to hold on to my cash because I keep spending it. There's always something. When silver was that low, I mean, it was hard not to spend the money because that's why you have the powder dry. That's why you have the dollars on the sideline, is for that opportune moment when it's a little too low. And that's what I think happened recently. So, yeah, I think silver was just way too low. It didn't make sense for it to be that low to 18. But then again, if there's margin calls and people have to cover their margin calls, they might sell. They might sell their gold, and that might be the first thing that's the most liquid. Like, if this potential buyer was out there at 50 million and they have a huge margin call, I'm not saying they do. They're probably smart money getting ahead of the curve right now and getting it at the right time. But if they're smart money, and they obviously are if they're a billionaire, say they have, a bad margin call position in the stock market, they might sell that gold position first to cover the margin call and then come back to the gold position after covering that margin call later on down the line. So you might see that happen. That's just a possibility. Will that happen? I don't know. It happened in 2009 and 2010. So it's possible. But on that note, we will call it a video. Thank you so much for spending your Friday night with me, everybody. We will be making, I actually haven't missed a Friday night live in the past, I think like 5 or 6 times. So pretty cool to get back to doing these Friday night lives. Maybe I'll start doing them a little bit earlier. I tend to do them at like 9 o'clock Pacific time. I'll probably go down to like 7 o'clock Pacific time in the future. But make sure you follow me on Instagram, at Rob Sultan on Instagram if you want a notification and you want to check out the things I do for a business and stuff. Mineral Exchange is my business, mineralexchange.com. If you want to check out my auction house, I would really, really appreciate it. We got 185 people in here. If you all made an account with Mineral Exchange, it would mean a lot to me because we are really trying to do good things with it. It's really cool, too, for people that didn't know about the vintage bullion market. If you really think about it, when people pressed a Morgan silver dollar, they didn't expect people to be collecting them based on how much scratches it had or anything like that. A Morgan silver dollar could be a $20 coin. It could be a hundreds of thousands of dollars for a Morgan silver dollar based on it's Carson City, whatever the grade is. Nobody expected it to be collected like that. But that's what happened with vintage bullion with companies that went out of business, like this Engelhard, things that have like a double strike on it, like this Engelhard does. This was a recent one that came in, and I'm pretty excited about that. But yeah, that's the video. Thank you so much for watching. I will see you all at the next one. Signing out.